Good morning, Melonheads. Fat fingered another one this morning. How you guys doing today? Hi, Mom. Hi, Dad. I love you guys. I apologized a couple minutes ago, or an hour ago, whatever. I don't know. I fat fingered another live stream, another spontaneous live stream. You know, one click in the wrong spot, and boom, I go live. It was only like 3 seconds long, but that was enough time for like 10 of you guys to send me comments or emails like, hey, you just accidentally went live again. It's been one of those mornings, folks. And as you well know, I am not a morning person. No, I'm not. So it's been a little bit of a hectic morning. I usually freak out right before my live streams anyway. So it's just been another one of those, man. But we must press on. The world goes on, and there's a lot happening in the world. But first, I have to send a shout out to my buddy Kyle, because you may notice the picture is a little better today. Finally got my new camera working. I bought this thing months ago, and it's just been an expensive paperweight because I haven't been able to get the thing working. I'm a reasonably technical guy. My day job is an engineer, but when it comes to electronics and camera gear, man, I'm illiterate. I might as well be illiterate. My buddy Kyle came over. It's like, I can't get this thing to work. I've been trying for months, and I wasted so much time. He had it work in like 5 minutes. 5 minutes, like, oh, yeah, blah, blah, blah. I don't even know what he did. Thanks, brother. Appreciate it. Anyways, so now we got the new camera going, and, so I just, getting the software hooked up and everything else. That's why I did a spontaneous live stream this morning. All right. Now, I also just realized I didn't set my windows properly. So, Jack definitely did not bring his A game this morning. That's all right. My wife's going to yell at me for that. But let's shrink my big, fat melon of a head and see what's happening in the world today, because we got the banks are starting to show problems. And, first, let's just look at the indexes and see what we got going. It is 9:18. Markets open in about 12 minutes. And we're looking at the S&P set to open down 26 points, or about 0.5%, a little more than 0.5%. The Dow set to open down 248. Now, we were looking about flat a little while ago. And while I was freaking out and fat fingering spontaneous live streams, apparently we dropped 200 points. So there's a lot going on there. And the NASDAQ is bouncing around quite a bit, but also trending down this morning, down 44. So it looks like market's going to open in the red. We had a monster run last week, which I got to eat some crow. I didn't call that monster run last week. I was in the bear camp. So, I guess in hindsight, when I look, markets were really, really technically oversold and were due for a bounce. I should have seen that one coming, so that one's on me. But, hey, we'll see what happens this morning. Now, I still think the overall trend in the market is down. I do not think we're going to see another all-time high until the Fed turns the printing press back on. And I don't think the Fed is going to turn the printing press back on anytime soon. I think we have a lot of pain ahead of us before we get to that point. And we'll see what happens. Also, let's take a real quick trip through commodities. Let's see what the commodities are doing. Gold and silver are down just a hair today, relatively flat. Silver down 16 cents, almost 0.75%. Gold's only down a couple of bucks. Looks like copper is flat for the day. Platinum and palladium are moving about 1% upward. A lot of stories with energy this week. We've got this WTI crude is at 118, almost 119 now, up almost $2 today. And Brent is up pushing 120 right now at 119.69, also up almost 1.75%. There was some legislation in Europe that went, I guess they're pushing it. I don't know if it passed or not yet, but they're trying to ban all Russian crude oil imports. And I guess oil markets like that news. Although, to be honest with you, all these sanctions that I've seen coming out of Europe in recent months have really just been all talk, and they're still essentially buying the oil one way or another from Russia, whether they go through third parties, intermediaries, or just import products that are refined from Russian oil from India or someone else. We'll see if this one actually has any teeth, but suffice it to say, oil is liking the news today and heading higher. Natural gas heading a little lower. All right. Now, let's get to the meat and potatoes of what is going on in the world, and I see some stories starting to emerge. I'm starting to see some trouble in the banks, all right, in particular, European banks and Chinese banks. Now, back in the fall, on almost a daily basis, I was covering the China Evergrande collapse. And one by one, these developers were going bad and defaulting on their bonds or missing or delaying payments. That story has continued, even though I haven't covered it as much as I've been covering it, because it kind of fell from the headlines. But don't mistake that for like the problem being solved. It's still going on, and it's actually getting worse. And we're starting to see some trouble in some smaller Chinese banks. Last week, it was reported that it was 3 banks. This morning, I'm hearing that it's 4 banks, and now I'm hearing that one of the larger banks may starting to be affected. So this banking crisis is starting to pick up steam in China. But that's not all. We're starting to hear more issues from Credit Suisse. And I don't know if you remember Credit Suisse a few weeks ago. They were in the news an awful lot because they have just had a string of really bad news, really going all the way back to 2021. And now Credit Suisse is rumored to be starting to try to raise capital, although the bank denies it. There are these anonymously sourced stories, and you know how I feel about anonymously sourced stories. They really drive me nuts, but nobody's willing to talk anymore because we don't have a free and independent press and people aren't free to speak their minds. But let's just get right into this story here. Credit Suisse weighs options to strengthen capital sources, and this is dated this morning, 6:12 a.m., and a couple of folks, I got to send a shout out, Mike Binder, Brian Zarb. I had a couple of folks send me this thing, and this is just great. I mean, this story came out 3 hours ago, and I had multiple people send this to me. So thank you guys. This little intelligence network that has sprang up around this channel is really awesome. I love that you guys do that. Please keep them coming because there's just not enough hours in the day for me to read every story that pops up or go hunting for it. So having you guys out there sending me this stuff is great. But just to give you a little bit of the news here, Credit Suisse is in early stages of weighing options to bolster its capital after a string of losses has eroded its financial buffers. 2 people with knowledge of the matter told Reuters. And there's that thing that drives me nuts. 2 people with knowledge of the matter told Reuters. I hate anonymously sourced articles, but this one is too big to ignore. The size of the increase would likely exceed 1 billion Swiss francs, which is roughly $1 billion. But this has not yet been determined, said one of the people who declined to be named because the deliberations are still internal. The cash injection would help Switzerland's second biggest bank to recover from billions of losses in 2021 and a series of costly headaches. Now, I just want to emphasize that the bank is denying this. Scroll down a little bit here. We have Credit Suisse is currently not considering raising additional equity capital, the bank said in a statement. All right, so the bank is denying that this is going on. But I'm seeing this in a lot of different news outlets today. And not for nothing, but I find this story entirely plausible and believable. And here's why. Just a little refresher on a couple of the headlines from Credit Suisse in the last year or so as to why this bank might be needing to raise capital. Well, here's the big one. I don't know if you guys remember from last summer, on July 29th, Credit Suisse reports a $5.5 billion loss from Archegos, as they have a massive culture problem. Now, if you remember Archegos was that hedge fund that was run by Bill Huang, and Bill Huang was already banned from trading securities in China because of fraud allegations. So he comes over here, and he used these obscure trading instruments called total return swaps to take out large levered positions with 6 or 7 different banks. So what he basically did was he bet all his money with 6 different banks. How do you do that? Well, these banks have culture problems. Their risk management people didn't sniff it out. And these total return swaps, basically what happens is he cuts this deal. He borrows money from the bank. But what the bank does is the bank buys the stocks. In this case, it was like Viacom, CBS, and a couple of media companies. But the stocks are held on the books at the banks on his behalf, and he has to pay a monthly fee for this service. And then depending on what the direction of those stocks is, the banks either pay him the returns or he has to pay the banks the losses as those stocks move up and down. But the banks never sat, or the stocks, they never sat on Archegos' books. They stayed on the books at the banks. And he did this with all of his money at 6 different banks. So what happened when these stocks started to crater, the first bank margin called him and said, the losses are so big, you owe us all this money. It was basically a margin call. And Bill Huang paid them. And then the second bank called and said, hey, these stocks are down so much, you owe us all this money. And Bill Huang was already out of money. Whoops. And Credit Suisse was the last in line to peck at the bones of Bill Hwang's Archegos hedge fund, and they lost $5.5 billion. All right, it was a $20 billion total loss, or a $10 billion total loss. Half of the losses were at Credit Suisse. All right, so that was the big one. That was last year. Credit Suisse got absolutely clobbered on that. But that wasn't the end of it. Earlier this year, this is in March, Credit Suisse got caught telling their associated hedge funds to go ahead and just shred any evidence that we made this $1.7 billion in loans to Russian oligarchs that was secured by their yachts that are now being seized by militaries all over the world. And Credit Suisse said, go ahead and shred those documents. Oops. When banks tell people to go ahead and shred documents, it's not usually a good sign, right? That's probably, again, the sniff test, folks. If something doesn't smell right, don't eat it. Turned out they had $1.7 billion in gross exposure to Russia and Russian oligarchs. Oops. That's a bad place to be when sanctions get put in place. So Credit Suisse had all these losses from Russia also. And then, we've got this other couple of things here. This is on CNN Business. This is dated April 20th. Credit Suisse's legal headaches cost the bank another $700 million. Whoops. Oopsie. Not good for Credit Suisse. And this, there was some detail as to, I can't remember the exact quotes, but it involved the former prime minister of Georgia and a life insurance policy. And also all these accounts that they were basically holding money on behalf of drug dealers and tyrants and warlords from all over the world. All these legal issues added up to about $700 million earlier this year, which results in, just a couple of days ago, Credit Suisse having their credit downgraded by Fitch. And S&P has already done that. All right, so Credit Suisse has a lot of problems. Now, I've been kind of saying that when it breaks, when something goes bad, that I think it would be European banks first. That I've always been saying the European banks will be the first ones to go because they're more highly levered. Well, I had always kind of thought it would be Deutsche Bank because they're the biggest one, they're the most highly levered, but it looks like it might be Credit Suisse. Now, again, this is a rumor. Credit Suisse is not insolvent. Credit Suisse has not failed. But the fact that they are looking to raise capital after all of these debacle stories, not a good sign for Credit Suisse. And with the banks, when the banks are struggling, they don't just come out and say, yeah, we're struggling. We could really use some help. No, these guys are all like, our bank is fine. Our bank is fine. We're fine. We're well positioned. We're well capitalized right up until they're not. All right. So the fact that the bank is denying it and saying they're well capitalized gives me zero confidence at Credit Suisse. All right. And before I go any further, I got to send a shout out to Mr. Mike Binder. Thanks, Mike, from Robin RC Models in the Super Chats this morning. He says, so is it up or down? I think we haven't even started to look ugly. Evergrande, Tether, derivatives, out of cash. My thoughts are down, Mike. I'm thinking down in a big way. I don't want to touch the bank stocks, okay? We had a good run last week. The market did really well. My opinion, it was just a technical correction from this overall downtrend that we're staying in. We're not in a bear market. We're close to a bear market, but we're still just in correction territory. I still think the overall direction of the markets is going to be down, and certainly not the banks. With stuff like this going on in Europe's banks, if an outfit the size of Credit Suisse were to fail, there's no way it wouldn't affect American banks. Just 0% chance it affects American banks. So no, I'm not touching Evergrande. I'm not touching Credit Suisse stock. I'm not touching any bank stocks right here. It does look very ugly. And Evergrande and Tether, as you mentioned, we'll get to those in a minute. There are dotted lines to what's going on in cryptocurrency here, folks, as Mike points out. Although not the European banks, I think that has more to do with the Chinese banks, which we will talk about in just a moment. But again, monetary policy is getting tighter. Interest rates are going up. Debt is getting more expensive. It's getting harder for people to pay it back. Consumers have less money to spend after they buy food and energy. That's all stressing the financial system, which the banks are the heart of. And Dumb Money Media here says, how to short Credit Suisse? Well, you could always buy puts in Credit Suisse. Personally, I don't short individual stocks. That's just me. I like to short sectors as a whole. That way I am protected from any singular risk. But the easy way to short it would be to buy puts in Credit Suisse if you really want to short Credit Suisse. Again, I'm not advocating that. I'm not doing that. I'm just staying out of the financial sectors. And you could argue you could short the banking sector by owning physical gold and silver because that makes you your own bank. And then when the banks fail, your gold and silver becomes incredibly more valuable. But thank you, Dumb Money Media. I appreciate the super, brother. And Dumb Money Media is again in the supers, and he says the big guy meeting with JP soon. Stocks to moon. The big guy meeting with JP, are you talking about the president and Jerome Powell? Are you talking about Jerome Powell meeting with JP Morgan? That's interesting. I hadn't heard of that pending meeting. But no, I don't think stocks will moon. I really don't. They don't moon until they turn the printers on. And I can tell you folks, the pain that will be required to get Powell to turn the printers back on, we're nowhere near there yet. We haven't even scratched the surface of that. Again, go by the cab driver indicator. You get in the back of a cab. You strike up a conversation with the driver. What do you think he's more likely to complain about right now? Is the cab driver worried about his pension? Is he worried about the stability of his bank? Is he worried about his stocks? Or is the cab driver going to be complaining about the cost of gas and how much it cost him to buy food the other day or the price of a plane ticket? I think the cab driver is totally talking about the price of gas, i.e. the inflation problem right now. And the reason I talk about the cab driver indicator is because the Federal Reserve is a political organization. They're always reactionary. They never are proactive in addressing problems. They cause problems and then way too late react, typically overreact to them. So the Fed is still focused on inflation because that's what the public wants them to do. All right, so they're going to fight inflation. And how is Jerome Powell going to fight inflation? The way he said it. He said he's going after demand. He's going to try to reduce demand, which means he's going to try to make it so people can't afford to buy stuff. That's what reducing demand means. He won't say it because he's a politician, but he's going to create so much economic headache that people stop shopping. Why do they stop shopping? Because they're broke. They lost all the money because their house is worth less money. And history shows when people's homes go down in value, they spend less money. It's called the wealth effect. It's a psychological phenomenon. People spend less when their home is going down in value. So that's what Powell is going to do. And we're nowhere near that yet. I mean, home prices, data just came out today. Home prices up another 20% year over year in March. So we haven't even had the turn in housing yet. This gets much worse, much, much worse before it gets better. But thank you, Dumb Money Media. I really appreciate the support, brother. He says, I meant Biden. It wouldn't let me put Biden in the super chat. That's funny. It wouldn't let him put Biden in the super chat. That's not me doing that. I can tell you that. That is, well, let's just say certain words are verboten on this platform. But thank you again for that. I appreciate the super chat. All right, man. Let's see. Now, we said banks, and we talked about the European banks. We talked about Credit Suisse. Oh, but that is not the only bank problem going on right now. No. You remember I was talking about the Evergrande story all fall because the real estate developers in China have been collapsing. And I gave a whole talk at the Dallas meetup in Texas back in March about just how ridiculously bloated the Chinese real estate bubble was. And that how the story wasn't over. It was going to keep getting worse and look for it to start showing in Chinese banks. And I think that's what's just starting to happen. Now, I had to go all the way to the BL, which is a website I've never heard of, to get this story because American press doesn't cover China. They just don't. You know, they'll talk about the high-level stuff going on in China, but as far as like what's going on in the Chinese financial system or human rights abuses, our press just doesn't cover it. Why? Because most of our media outlets, our TV networks, are owned by companies that also own movie studios. And if they want their movies to be released into this vast Chinese market, they need to get the approval of the censors who work for the Chinese Communist Party. And if your news network has been critical of their grotesque human rights record, your movie won't get released in China. So American press doesn't really cover China the way it needs to be covered. You have to go to these obscure websites like the BL.com. Thank you, BL.com, for having some journalistic curiosity and integrity to cover this story because our mainstream journalists are asleep at the wheel, willingly so. But check out this story. China's banks freeze deposits and secret undercover police suppress protesters. Now, this story started, I was actually talking with Joe Brown at Heresy Financial about this a few days ago because I was trying to figure out what was going on with the mechanics of the banks and if it could be related to possibly a bank run starting. And I never ran with the story. I should have, but at the time, there was only 3 banks were showing any sign of risk. Well, now it's 4. Let me just read you from this story. Recently, many rural banks in Henan, China, have not allowed depositors to withdraw money, which has caused a public protest to demand protection of their interests on a large scale. I just want to say that many rural banks in Henan, China, have not allowed depositors to withdraw money. Imagine if you go to the bank or if you go to the ATM, your balance is fine, and they just say, no, you can't have it. Sorry for the inconvenience. Now, initially, when this story broke, it was 3 local banks, all in this Henan province. And it started in April, and they told people, well, we're upgrading our systems. Sorry for the inconvenience, right? Technical difficulties, just like crypto exchanges. Whenever Bitcoin is crashing, they all seem to have technical difficulties at the same time, right? Well, that's China took a play right out of that book. Now, this is going on a month, and they still have gotten no explanation from these banks beyond the fact that their systems were down for maintenance. Now they show up at the bank, and there's cops there turning them away. Whoops. So they start to protest. And when they start to protest, now there's plainclothes jackboot thugs get off a bus and start beating them up. Maybe there's some problems brewing in China's banks. Maybe. Now, let me just show you about this. According to a number of videos posted online, the Zhengzhou government sent a large number of policemen in both uniform and plain clothes to arrest people, then forced the protesters to write pledges before releasing them in the wasteland. That's kind of a strong, releasing them in the wasteland. That sounds kind of like a little Thunderdome, as my man Chris Taylor over at Financial Fitness would say. Releasing them into the wasteland. That's some Thunderdome stuff right there. Where they were unable to contact their family on May 22nd, as 4 banks in Henan did not allow people to withdraw their bank deposits. Outraged depositors gathered at the main gate of the Henan Banking and Insurance Administration and Henan Banking and Insurance Regulatory Commission. So this is kind of like the Chinese FDIC. They went and protested at. At the scene, the protesters sometimes cried, sometimes shouted slogans, sometimes in unison, sang the March of the Volunteers, which is the national anthem of the PROC, sorry. The scene looked chaotic. Now, I just want to give you a little bit of what this looks like. Check out this video, and I can't pronounce his name because I don't read Mandarin, but check out what's going on here. This is the protesters in the foreground. You can see uniformed police in the background here in blue. But all of a sudden, out of nowhere, you're going to see people in street clothes just come in and start grabbing people. Here they are. Plainclothes cops. Grabbing people and dragging them away. That's your Chinese brown shirts is what that is, folks. And there are some other angles showing this. Again, we've got plainclothes police officers. Well, they're military-aged males in street clothes, right? The reason why they take their uniforms off is so they can't be identified as police officers. And the masks, again, conveniently cover their identity, so it's hard to prove they're police officers. But here's another angle of this. Here they come, dragging people away. Dragging them away for the high crime of going to the bank and trying to get their money out. That's why. And they were told, our system is down for a month. And so they went to the government and they said, hey, this bank stole our money. Can you help me? And plainclothes police officers come, beat them over the head and drag them away. And then make them sign phony pledges and then release them into the wasteland. Thunderdome, Chris. You watching, Chris? That's some Thunderdome stuff right there, brother. So you've got these 4 local banks, all right? These are small rural banks and all in Henan province. Whatever is going on is in Henan province. And I've been trying to find a common denominator in Henan province, some company that went bankrupt, some project that went belly up. I haven't been able to find out yet why it's all localized to this area, but I am digging. I will find it. And then I saw this one today, And again, NTD.com, our media doesn't cover this stuff because they need their movies released in China. At least that's my theory. Now they're saying ICBC, which is like the International Commerce Bank of China, I believe, or Industrial and Commercial Bank of China. Now, this is a big multinational bank in Beijing, all right? This is not some rural bank in Henan province. A renowned Chinese multinational bank, but even its branches in China's capital city now may have trouble processing withdrawals. Is it that they're short of cash, or are there other reasons behind the holdup? This is ICBC. This is not a small rural bank. This is a big multinational bank in Beijing. Will not let people withdraw money. Something is going wrong in Chinese banks right now, folks. Something big. And there's Mike Binder again in the super chats. Thank you, Mike, so much for your support of the channel. I really appreciate it. From Robin RC Models, he says, you have to work on your Chinese pronunciation. Seems the NASDAQ is unhappy. I do need to work on my Chinese pronunciation, and I don't know that we need to be so specific, Mike. I think I just need to work on my non-regional diction as a whole because I don't get out much. I love it here where I live. I did spend some time in Texas recently with the Ninja and with Mr. Chris Taylor, and it was awesome. I got to meet some of you guys. Had a fantastic time in Texas. But that's about as far as I stray from my little location. So I don't, my pronunciation is probably pretty bad. But feel free to make fun of me. You're not going to hurt my feelings. I get it. You well-traveled guys, I get it. You can make fun of Jack. And he says the NASDAQ's not happy. All right, let's take a trip back through the indexes because the market is open. It is 9:43. Let's see what's going on. Looks like the S&P is currently down 32 points or 0.75%. This is the futures. Let's go to the market, not the futures. All right, here we go. The S&P is down almost 50 points or 1.2%. Having a rough morning. What do we have going on in the Dow? Down 382. Ooh, look at that. Nice drop at the open there, huh? Right at 9:30. Step change down. All right, we're going to have to keep an eye on that. Down 1.15%. And what is the NASDAQ doing? NASDAQ is down 74 points or about 0.5%. No, that can't be right. Hold on. Let's refresh that. Well, then right now this is saying 67, even though up here it's saying 144. So I don't know what Yahoo Finance is doing. Let's get an independent second party, shall we? Let's see what investing.com is telling us about the NASDAQ right now. They are saying the NASDAQ is down. Down 136 or 1.13%. Looks like a step change down at the open today. Let's 1 day chart. That doesn't help. How about a 1 week chart? There we go. All right. So that's looking at the NASDAQ right now. Again, big red candle down at the open, but keep that in perspective. Check out what happened the last week. All right. We had a big run last week. But we got to zoom out a little further and look at what it's done for the last 6 months. Even that big run last week is barely just a technical uptick. So we'll keep an eye on that right now. But the NASDAQ is not liking life right now. That's Shanair. Come on. Where's my NASDAQ here? Yeah, all over the place this morning. We're going to have to let the algorithms do their thing this morning before we figure out where we're going. All right. So we'll keep an eye on that one. But thank you, Mike. I appreciate the super chat and the support of the channel, as always, brother. And I will work on my Chinese pronunciation. I said Zhenzhou. Is that the name of the... I don't know. But I usually say it wrong, and, well, I'm probably going to keep saying it wrong because I don't get out much. But thanks again for the support. There's Steve Whitus. Hi, Steve. Thank you for the super chat, sir. He says, Fed to tighten into midterms. Administration takes credit for fighting inflation. Fed to ease into 2024 election. Administration takes credit for saving 401ks. What do you think? I think the administration will take credit for the invention of the printing press by Mr. Johann Gutenberg during the Renaissance if they think they can get it past people. They'll take credit for anything. They will shirk blame for anything. So I would not put anything past them. Now, that said, Fed tightening into the midterms. Check out Joe Brown over at Heresy Financial. He has an interesting theory about reverse repos, and it makes sense. It holds water, where the Fed may actually be able to tighten into the midterms while at the same time doing QE, not by actually printing money, but just by tweaking rates a little bit in certain areas. And I'm not going to get into it right now. It'll take me 20 minutes to talk about it. But But check out Joe Brown's theory at Heresy Financial about the reverse repos and how the Fed could actually continue to tighten but still inject liquidity into the system using the reverse repos. And that may be how I don't think it's enough to stop the problem, but it may be how they buy themselves enough time to get through the midterms without everything breaking. All right. As far as easing into the 2024 election, I think that is guaranteed. I guarantee that happens. I don't think we make it to 2024 without the printers coming back on. All right. Now that will correct markets. That will correct assets and send them back up. But that means a whole new world of hurt for the average person in the inflation space. So I'm not sure that's really going to help any political party, because a hyperinflationary scenario is just the worst imaginable economic scenario would be hyper-stagflation. All right, and hey, doom and gloom over here. I get it. Jack's always negative, but that's where I see us heading. And these folks, these politicians are very predictable in how they act. So I think that's where we could be going. All right. And real quick, I was talking about the Chinese thing, and we talked about ICBC. And just so you know, I just want to mention here, this is in Bloomberg. This is, was this just yesterday? Just yesterday. These China developer bonds are flashing big warning signals. You know, I mentioned at the start of this stream that I haven't been covering the Evergrande story as closely, but that doesn't mean, get this window out of my face. That doesn't mean that this story isn't still going on. And, you know, while these Chinese banks are starting to fail, here's more of these developers. Some debt from firms, including Shimeo, had slid below 25 cents, and the crisis has spread to builders that had been seen as safer. So these Chinese developers, they're still failing on their bonds. They're still not making their payments. And I think this is where this Chinese banking crisis is coming from, because all of these banks have underwritten these bonds, or they've issued these wealth management products, or these massive mortgages for apartments and buildings that nobody wants, nobody's going to live in, but for some reason people keep buying them, mainly because of the one-child policy and what it's done to population demographics. But this story is still happening. That's what I want to say. It's the developers, they're still defaulting on their bonds. The debt is still going bad, and now the banks are having problems. All right, and here's this chart here. This is showing 5 or 6 of these different Chinese developers and what their bonds are trading at right now. And you can see this decline started last summer when these bonds first started to waver. They came way down in the fall, and now here we are in, you know, through the spring, and they're still going down. They're trading down around 20 cents on the dollar. That means these bonds are dead, that there's very little hope that they ever get repaid. And really, honestly, the only way these bonds get repaid is if the government, central bank, comes in and prints money and bails them all out. Maybe they do that, maybe not. Right now, they're not doing that. All right, so, but the PBOC is loosening their monetary policy. They are lowering rates. They are injecting liquidity. They're just not doing it like our central bank does when they do bailouts. Our central banks do bailouts big. China's still kind of slowly doing that, but there's also some friction developing between the PBOC, the People's Bank of China, like the Chinese Fed, and the Communist Party, because the Communist Party wants to attack the debt crisis. They want to rein in reckless borrowing in the real estate sector, you know, ruthlessly so, while the People's Bank of China is trying to inject liquidity and lower rates to save the real estate sector. And they're starting to see banking officials being taken away, the wives of banking officials being taken away. So I'm not sure what's going on behind closed doors in the Chinese banking system and the Chinese Communist Party. But put all this together, small regional banks failing, this bloated real estate bubble, the biggest real estate bubble of all time. This big bank, ICBC, now they're not making withdrawals, whatever that means. And then you got Chinese banking officials starting to be disappeared in the middle of the night. You got protesters being carried away by plainclothes police officers, right? You have the makings of a full-on banking crisis starting in China right now. These banking crises, they don't go all at once. Starts with the little ones, and it works its way up. And last week it was three little banks. This week it's 4 little banks and 1 big bank. So keep an eye out for this. And the developers continue to fail while this happens. All right, guys, we're going to take one last trip through the markets. It's 9:50. I've been going for too long. The S&P is currently down 43.88. Caught a little bit of a bounce, but it's still early, so who knows where we're going. The Dow is now down close to 400 points, or 1.19%, and the NASDAQ down 121, or just over 1%. to be honest with you, I'm a little surprised right now to see that the NASDAQ is down less than the other indexes. I'm still of the opinion that when we sell off, the NASDAQ should sell off harder, all right? Because the NASDAQ has the higher valuations, and the NASDAQ is the more debt-heavy companies. Typically, you want to see the S&P outperform the NASDAQ and the Dow outperform the S&P. In this macroeconomic environment, that's what we should be seeing right now. Right now, I'm seeing tech outperforming the industrials. Does not pass the sniff test to me. Anyways, guys, I want to thank you so much for your time. And real quick, I have to mention that on tomorrow at about 7 p.m. Eastern time, I am going to be doing my first Zoom meeting for my Patreon supporters. This will be at 7 p.m. Eastern time. And I just want to emphasize that this is not going to in any way take away from the rest of the channel, from everything else I do. This is something additional I'm doing for my Patreon supporters because they support me so much. It will be a Zoom meeting where you can be on audio only. You can be on camera if you want to, and we can interact directly because my Patreon group is a very small group. It's a little easier to do that. Now, I want to just throw out there, if you're interested in coming on that meeting, don't sign up for my Patreon today, okay? Because today is May 31st. If you sign up for Patreon today, Patreon's going to bill you today, and then they bill you on the 1st of every month. Well, the 1st of every month is tomorrow. So if you sign up for my Patreon today, they're going to double charge you, and I don't double dip. Okay, so if you're interested in being on that meeting, I'll post the details in my Patreon. I'll post it tomorrow. Don't sign up until tomorrow. That's important because if you sign up today, they're going to double charge you, and I can't do anything to prevent that. All right. But thank you very much to my Patreon supporters. Thank you, everybody, for my everybody who supports my Patreon. Thank you, everybody, for the super chats, including Troy Rhodes, who just gave me a super chat like 2 seconds ago. Hi, Troy. He says 180 a barrel by end of year. 180. That's hard. All right, I think 180 by the end of the year, because we're halfway through the year. That's going to require some major escalation of the geopolitical scenario, right? That's going to require like the Iranians getting involved or some other escalation, U.S. military involvement in Eastern Europe, although we're kind of already involved, just not directly involved. If we were to get involved in a kinetic war in Eastern Europe, yes, 180, all but guaranteed. If the Iranians get involved in this conflict, I think you need to worry about $280 oil, not $180 oil. But barring those two events, I don't think we see 180, although I do think oil continues to go higher. Right? But 180, that's a big leap. That's like another $60 up from here. It's going to take some other, I don't want to call them black swan because these things are happening like every 3 months in the 2020s, but it's going to take some other major exigent circumstance, like some other big thing to cause a jump that high. But thank you, Troy. I really appreciate the super chat. Appreciate it from all you guys. Thank you for your support of the channel. Thanks for watching. Don't forget to like and subscribe to my channel while you're here. And again, I have my Patreon only Zoom meeting will be tomorrow at 7 p.m. Eastern time. And I hope to see some of you guys there. Do not sign up for my Patreon until tomorrow. That way they don't double dip you. All right? All right, guys. Thank you so much for watching. Until next time, live small and dream big.